Yeah, you know, today's attacks on the tankers distracted the market from the bubonic plague that it's been looking at, which is demand destruction, economic slow growth. We had EIA report earlier this week. You mentioned OPEC reported. IEA will report tomorrow. It's probably going to revise growth down as well. You know, growth in oil demand hit the skids in the first quarter, but everybody said it's going to be fine. Later in the year, it's going to come back. But these series of trade wars and macroeconomic problems, combined with some patchy data we get in April and May, show that demand is really hitting the skids. So folks are focused on this demand downturn and what that can do to oil prices. And suddenly, out of the blue, comes the geopolitical risk to the bullish side.
Yeah, Helima, how do you sort of deconstruct what's going on in terms of who would have the motivation to attack these oil tankers?
I mean, I think what is extraordinary is you actually have Abe in Tehran right now trying to get a diplomatic off-ramp, and we have a Japanese tanker struck. I mean, my view is that we're likely to see escalation over the summer, more incidents like this, because from the Iranian government standpoint, the U.S. sanctions are designed to cause their economy to collapse and to elicit regime change. Now, we say we don't want a war, but there are actors in Iran, I would say in the Revolutionary Guard, who I think are willing to push the region to the brink of one in order to get the United States and our regional allies to reconsider the current course of action. So as long as this really rigorous sanctions regime remains in place, I think we're likely to have more of these incidents. And just yesterday, we had a Saudi airport struck by a missile from Yemen. And so we've had a worrying set of events that the market has largely ignored because of trade war concerns.
Yeah.
But if we get a rollover of the OPEC agreement, as we expect, you know, in a couple weeks' time, I think geopolitics will remain a big story for the market. It'll be fighting trade war for which one dominates price movements, but this is not going to go away.
Bob, as she said, the Iranian Guard could push the region to the brink of war, something I can see you agree with. And if their calculus is, well, the U.S. doesn't want a military conflict, so what? So we will ultimately give ground and give them waivers on exporting oil? I don't understand why that would be a logical outcome.
Yep.
And if not, what does it mean for the price of oil, which, again, is very, very muted right now?
Sure. I think we can look to history. As Helima mentioned, the Japanese prime minister was in town. Well, Japan's a country that knows about being pushed into a corner by the United States. President Franklin Delano Roosevelt put maximum economic pressure on Japan. But Japan rolled the dice. They didn't think they could beat the United States in a war, but they calculated through a limited war, they would put a hurt on the United States and bet that we won't pay the cost to come back and solve it militarily, and we would negotiate. One could argue that the Iranian IRGC and the hardliners are making the same kind of bet. They know they can't beat the United States, but they're being forced to either capitulate effectively. Secretary Pompeo's 12 demands that he issued last year were tantamount to regime change. I mean, you read those demands. Or put a limited war on the United States and dare a President Trump who shows no sign of wanting to lead this country into a war in the Middle East, much less deal with higher oil prices now. Bet that he will not pay the price and come back militarily. So Japan made that gamble and lost. Maybe Iran's making that gamble today.